All right, welcome to the weekend recap. I missed the one on Friday, so we're going to cover the sector review for Friday and for the week as well, and get prepared for the upcoming week. All right, so the strongest sector was TAN, and we have seen for a while that there is a relationship between the solar stocks and and TLT. So that is my only apprehension here because if we'll take a look at TLT, it was down on the day and it is in this red box. What I like to see is TLT retake kind of above this red box, and maybe this negative revap doesn't take mean much, but you see that downward trending 200 day. I'd like to see TLT above that and out of kind of the danger zone. And especially you could still take the risk as long as we are above these lows. But if we start to break below here, then it is risk off for the sectors that have been rate dependent, which is TAN, which has been IWM. IWM also has a KRE component, which is the regional banks component, which is rate dependent as well. So, keeping that aside, what I like is two things: price lower, RSI higher. Okay, so that is divergence. Then I like the gap up and go type situation that's going on here. This whole thing could be developing into an island. So we could open around the 46 mark and kind of start moving up from there. You could, that could definitely happen. But regardless, this looks like a good development for TAN. And if we look at ENPH, I'm not been following the solar stocks closely because they've been in a downtrend. But what you could do, another thing you can do is you can see ENPH has also been in a bit of a downtrend here. And the first thing would be to get above this 200 day for TAN. So having kind of having an alert set right above it could be also an entry point for solar stocks in general, or you could pick certain stocks. So if we look at First Solar as well, what it's doing, we still have it much below the 200-day earnings coming up next week. So Tuesday, 27th actually. So it's a few days from now. So we'll see how that goes and take it from there. All right. So that's TAN SMH. Semiconductor stocks put in another bullish week here. Ever since it has gotten above that 160 level, it's just a go here. And you can see if we just kind of zoom out here and go to the weekly, you can see how we were in a tight consolidation, and this was the escape in December that the solar stocks put through ever since NVIDIA kind of broke that 500 level, and it's just been go from there. All right, so obviously there was that thesis that there's this ascending wedge and we could be stuck in this wedge for a while, has been negated here. So I mean, I would definitely take the bottom line down, but you could keep the top line as if there is a correction, which at this point feels highly unlikely, but we've seen that corrections can be pretty fast. If there is, then this would be a major support level. There's also some gap levels here to be cognizant of as price comes down and cools off a bit. And I feel like everybody understands that that has to happen. But if you look at the technicals here, what is happening is price is just cleanly following the 5-week moving average. So the break of the 5-week would be step number one to maybe having some downside here and filling some of these gaps. You can see there was a false break here in early January, but ever since then the 5 week has been maintained. XBI was really interesting. We had kind of a few weeks where it felt like it's going to break down and it was not able to get above that anchor rewrap, but you can see how this week was very different, and it pushed through and got through that anchored rewrap, which is coming from the highs, the previous highs which showed the rejection here at the 93, 94 level. So that would be another area to watch, and this is going to get upgraded to a green because of that. Technically, TAN, I would move to a yellow. SMH is something that, I mean, I feel it's too obvious, but I don't see it as a good entry point at this point. If it does come to a good entry point, then I would mark that as a green as well. KRE, you can see there was that false break here down lower, but it did get supported. This, I believe, is the 20-day. Okay, so at the 20-day got supported, but we do have some overhead resistance coming through with the 50-day and the and also the 200-day, which could pose as some interim headwinds for KRE, but as well as IWM, which comes up next, and we can see that 2 weeks of kind of unsurety, but you can see the 5 week being maintained all through. This week we had that false break of the 5 week and went all the way down to 190, but then just picked back up right at the end, hugging that 200. I believe this is the 200-day or 50-day, hugging that 50-day and just blasting off from there. We are at these previous highs that we saw at the end of Jan, and it is likely, the way it is developing, that it goes and tests the top of the channel here at 204. So IWM then is back from a red to a. So you can see how the week before a lot of these were green, then last week got downgraded to red, and now they're back to developing some bases and some structure here. So that is good to see. IJT. IJT is small cap growth, and that also put in a good reversal here off of the 50-day. Similar, it looks very similar to IWM, and not a bad look here for IJT. We are at some resistances here from end of Jan in both IWM and IJT, and you can put alerts right above it to see if we have a break above in either of these. Okay, and IWC, you can see large volume here in the microcaps coming through, and with that support off the 50-day. I'm going to move back to the weekly charts. It gives us a bit more longer term perspective here. What IWC was able to accomplish is for 2 weeks, we were not able to get through the 200-week moving average, but this week we closed just above it, and we would want to keep an eye on how this develops and if there's movement forward in IWC. So maintain a yellow stance on that. XRT, I like the action here in retail. You can see it showing some strength as compared to the rest of it. First of all, it's not contending with the 200-day, it's contending with the 5-week here. So already shows a little bit more strength here. We're not all the way down here in price. We're up here, and you can see the even last week it maintained and closed above that 5-week, and this was a good move higher in XRT. I'm going to switch that over to a green on XRT, although we have seen rejections here previously at this level, but if we are able to get above, I just see a cleaner road and movement for retail, the retail ETF. XLK also maintaining a good kind of hugging the 5-week and moving up, so definitely still in green, but not marked as green for now, as I would be looking for a better entry point in XLK, maybe a little bit of a cool down. And same goes with QQQ, nothing to complain other than the fact that it is at the top of the trend line, We've talked about this. If we look on the daily, we still have a little bit more room to go, so we could move up to that 440, 441 area coming Monday. So that, and that is the area where we have seen selling come through pretty strongly before, and so we could see similar to that. So that just keeps me a little bit cautious about the Qs. IYZ telecommunications. So this one was a kind of a breakdown. We were looking at it from here where it broke that 20 day. It was not able to get through it, and there's been a sell ever since. So this still goes into stays in the red with the 5-week, or sorry, this is the 5-day moving down. If you want to look at the weekly, you can see the loss of that 5-week, and this whole this whole rally was maintained almost, except this actually even the weekly closures maintained the 5-week ever since, but this week was the first week that we lost that 5-week. We do have support down at the 2186 mark, but this would be a area to look into for possible shorts showing weakness. MDY pushing through here, and we had that thesis about a possible inverse head and shoulders here, but that has to be broken. The 515-ish has to be broken for that to kick in. But it was a good move along with the rest of the sectors here in MDY. So looking pretty decent here, and it stays in green. XLY also, this was a good move here with the likes of Tesla and other consumer discretionary stocks starting to show some strength. It looked like we're going to kind of fall through here, but it didn't even get a chance to test this previous level where demand or buyers and sellers have fought. It kind of pushed back up above it, showing that buyers were committed, and they were able to push it above that 5-week, 2 weeks in a row. So that is looking decently strong. I could technically upgrade this to a green. Yeah, it is above that 5-day as well. It is coming through with some resistance, the previous resistance here, and we could just mark that for keeping an eye on that, and that could be interim resistance. S&P touched the top of the trend line here, and we have seen that those tops have caused the starts of sell-offs, and this was the July sell-off all the way till October. We can see that happened, and then we've now seen it go all the way to the top from here. So a sell-off here could possibly take us down to the 450 level, and that looks almost unbelievable at this point, but 4,500 could be in the cards. So just something to be cautious about, but in other areas these trend lines have not worked for us, so this is just a kind of an area of caution. Price will still tell us the truth here, and what is likely to happen. And you can see another way of drawing this chart is this kind of huge consolidation that we have. This is dating all the way back to 2020, and you can see a break of this consolidation that happened in December or start of this year. That happened around the 46. Actually, that was at 1st of December. Yeah, 4,500 mark. We escaped. Price escaped that consolidation and is moving above. And this measures the move to almost 6,000 SPX. So so trend lines are subjective. You could be bullish in your perspective and draw bullish charts, and you can be bearish in your perspective, and you could start to look at things with a little bit more bearish outlook. So you kind of have to take that grain of salt when you are drawing these trend lines, but they do provide some context. And in order to, for example, if you want to look at maybe pullbacks, the first thing would be a loss of the 5-day, and if you want to play on a longer term trend line, you can see that 5-week has been maintained all through. So the first step would be a closure below that 5-week around that 4,800 mark. If that happens, then it is possible for for a check back or the 4500, and you can see that 4500 measures down here as a retest of this breakout point as well. Utilities, nothing special and very rate dependent, where rates were down. XLF was interesting. It felt like at some point in the week, it felt like we were going to not be able to get to this upside VPOC level around the 39.5, but we were able to save that downward move. You can see with a few closures on the daily below that 5-day, but it was able to maintain that through that week, through the week as well. So still looking decent on XLF. XLI is interesting because we are kind of trailing this top trend line here, but you can see the 5-day supporting and now hitting that top trend line. So a loss of the trend line, loss of the 5-day would be step number one to maybe noticing that this price could fall back down to the channel. Or if we have a break of this channel, then we could see something, this sector start to trend. So an important point, an important place for this sector, along with transports. I'm going to look at that as well. You can see how transports have kind of escaped. The price has escaped and has also previously escaped. And when it does escape, it is able to trend, a little bit higher. In this case, it failed, but that is still a good amount of movement here. If we measure that, that is almost a 17% move on the sector, which is a big move for IYT. You can see we're at previous highs, and we have kind of broken this channel at the top of the channel, so we could see some consolidation here and a move up maybe, or a breakdown in IYT. IYR, you can see real estate also had a decent week after almost breaking down the start of the week. We're able to pick back up, and we are now at the top of the trend line in the real estate sector. So a break of this could mean decent things. My hunch says that we might be waiting for the March announcements for FOMC, but I'm not sure. I'll let price dictate this. And just a few more, we can see ITB tried to kind of break above here and close, in this area where we have had a false breakout and a closure down. It just doesn't look like the best setup to me. It feels like it needs more time, especially because of this false breakout above and the closure and kind of a breakdown from there. My hunch tells me that this needs a little more time. But of course, if price starts to break and volume starts to show above these previous highs, then this would be a sector to start looking at as well, home builders. USD CAD price is stuck between these two trend lines, and it tried to fall back all the way down to 1.34, but was kick saved up at some point in this week. But a decent closure here, still at support, so we could see price move up here. But if we break down below, then we could come back to the 339 level as well. The medical devices, probably the last one I'm going to cover today. IHI. We can see that we are in this kind of V-shaped recovery and at that previous highs here, which is from the July highs. So break of that would mean good things for IHI. So far, we had a bit of a rejection this week at those previous highs, but we are still being supported by that 5-week, and I haven't lost that. If you want to close it down by just a few single stocks, we can see Tesla put in a decent week, and it was able to close above that anchor revap level, which, ever since that earnings sell-off, it has not been able to struggling this week. It was struggling the next week, but this week it was able to do that false breakdown and then move up. I could see it at least measuring up to the 200 level, which also coincides with the 5-week moving average. And if we are able to get above, then maybe the 220 level would be an area for Tesla to get to from here. Shop has earnings this week. It was able to escape with the um, volume just a little bit larger than usual, but it not confirming, not necessarily confirming a breakout here. And I can see that larger institutions and stuff might be waiting for the earnings report this week in order to confirm this. It's a stock that I'm watching, and I do believe long term, but I'm just a little hesitant about this breakout coming through before earnings. Um, so gotta wait for the numbers, and we'll look for decent entries in this name. Yeah. SITM is another interesting stock which has earnings this week. It is stuck in this kind of consolidation area. Never has been ever since October 2022 and has not been able to escape that. It put in this kind of bullish reversal last week from the price touching the bottom trend line. So a break of this and a break of the 200 week around the 130 level could mean that we could move higher in SITM. So something to kind of keep an eye on, as semis are, pretty good, doing pretty well. I forgot one sector, which is XLV. It has been a sector of interest for us from the start. It did put in a decent week with price a little bit extended, so seeing a bit of sell-off, but it is maintaining that 143, 144 level. If we move to the daily, you can see that we are just hugging that 5-day here. A loss of the 5-day could mean that we do come down under the 141 level, which would be the previous highs here, and find some support at the 20-day. And some stocks of interest here are where are my healthcare stuff? SYK is a stock of interest here, consolidating that earnings move. Thought it was going to break down here, but it did push through and put in that reversal on Friday, which is good. BSX is another stock you can see while others were struggling a bit with XLV down sometime midweek. This was still maintaining and holding the 5-day every day of the week. And you can see this one wasn't as clean. We didn't lose the 5-day, and we were able to get through the 5-day. But BSX looks like it has a little bit more strength, a little bit more buyer support here, where it was able to maintain that those moving averages. ESPR is another stock of interest. It's more of a kind of just a hit or a miss type play, but it has been a subdued kind of healthcare stock for a while, and it has earnings coming up, tends to move a lot on these earnings move, and it hasn't in the past. You can see the measured move here was somewhere from 1 to 2.5, 250% or something already, but it's positioned accordingly. It is a $2 stock. And lastly, MOD. What I did not like is the heavy volume here with the false breakdown. But you could start, now that the price is above that 70 level. You can see what I was a bit worried about is price moving higher, but there is that on the daily, there is that RSI divergence coming through. Price higher, RSI lower. Now the price is moving higher. I feel like if RSI is able to also retake and move up here, then it would be kind of negated, this RSI divergence. Like, it's not my favorite setup, but it's also not my worst. So maybe it needs more time to kind of base in and form a better base here, which would give us a lower risk point of entry. But not a bad look, on the technicals. We tried to break down below the 5-day, but maintain that throughout, or not throughout the week, but at the end of the week. And if you look at the weekly chart, we did not close below the 5-week ever since that. So maybe looking at the weekly would be a better way, and a loss of the 5-week would be a point to look at. Maybe further consolidation coming through in MOD. All right, so that was it. I hope that was helpful, and I will see you guys next week.